In this video, we're going to discuss the FASB, which stands for Financial Accounting Standards Board. So the FASB is a nonprofit organization that has 7 board members, and those board members are responsible for creating the accounting standards that are used in the United States. So they basically make GAAP, which is generally accepted accounting principles. And the responsibility for making GAAP technically lies with the Securities and Exchange Commission. However, the SEC has delegated this responsibility to the FASB. And because the SEC is a public agency, it's a governmental agency, and the FASB is a private agency, you'll often hear people refer to this as a public-private partnership, right? So the SEC, they have the authority for regulating firms that are listed on U.S. stock exchanges, and they can enforce it and do enforcement if there's any kind of problems with the financial statements that are issued and so forth. But the SEC doesn't actually make the accounting rules. It's given that authority to the FASB. So the FASB actually makes the accounting rules and updates them on a regular basis. So a little bit of background on the FASB members, those 7 board members. So they each serve a 5-year term, but they're eligible to get 1 additional 5-year term. And they work at the FASB full-time, which is different than the organization that preceded the FASB. It was called the APB. And basically, the APB, the people who worked for the APB, they were making accounting standards just like the FASB, but it wasn't a full-time job for them. They continued to work at whatever accounting firm they were working for before. And so that can make them not really independent. But with the FASB, it's different. This is their full-time job. So these 7 board members, that's what they do. They're not, if they work for an accounting firm before, they have to sever all ties with that employer, so they can't keep working for an accounting firm while they're working at the FASB, and they get paid by the FASB. This is their job. And they're not required to be CPAs, although in many cases they are, and they're supported, even though there's just 7 of them, they're supported by a much larger technical staff. So there's dozens of people on this technical staff that help the board members do their job. Now, there's a pretty complex process by which the FASB creates accounting standards, right? They don't just kind of go in a room and say, hey, what would be the best accounting standard, and come out and tell everybody. It's more complicated than that. But basically, start out, they add some project to the agenda, right? So they've got an agenda of projects that they're working on. Maybe it's something that's been very contentious or something like that, or there's diversity in accounting practice. So they add this project to their agenda. And then they generally hold public meetings. Sometimes you'll hear that, you'll see that, oh, the FASB had a roundtable discussion where they discussed pension accounting or something like that, right? So they have these public meetings where they're hearing from stakeholders, they're hearing from accounting firms, from businesses in the industry, and saying, okay, what are your concerns about the costs and benefits of a potential new accounting standard? And then once they have these meetings, they've taken in some feedback, they've talked with their technical staff kind of about implementing a standard, they issue this thing called an exposure draft. You could think of the exposure draft as kind of like a rough draft, like when you're writing a paper, you make a rough draft of the paper before you have the final version. You could think of the exposure draft in the same way. They're basically saying, look, here's the standard as we've currently got it. Here's the new accounting rule. What do you think of it? And then at that point, they're soliciting what are called comment letters from the public. So people like you and me, or it could be companies in many cases, it's usually firms, or it could be a nonprofit agency or something like that. Somebody that has some kind of stake in the issue will go and they'll actually write a letter to the FASB, but these letters are made public, and so you can actually go and request the letters and so forth from different accounting standards to see who complained or something, because in some cases people will say, hey, I don't like this exposure draft at all. I think there are serious problems here, and maybe the cost of compliance is going to be really high. The firm is worried that it's just going to be too costly to do all the things they would have to do to be in compliance with this proposed rule. Right, so you've got these different comment letters, and then the FASB will take those into consideration, and at that point they may again hold more meetings. So they try to be as transparent as possible, and again, this isn't just a thing where some accountants go in a room and come back and tell everybody what the rule is. They try to take feedback from the public throughout, and then at the end, what they do is well, usually, I mean, they would end up having an accounting standards update where they issue the new rule. It doesn't have to be the case, right? I mean, they could be the case that the exposure draft, the comment letters were so bad and everything that they didn't end up having an accounting standards update. But typically, the final step in the process is we have this accounting standards update, or you'll see it called like ASU 842 or something like that. ASU stands for Accounting Standards Update. And so now you've got this new rule, and this is GAAP, right? So this is now part of GAAP, and it's incorporated into the Accounting Standards Codification, because now we in the U.S. we have this codification system, right? Everything's codified by topic, receivables, pensions, and so forth, right? So at the end of the whole process, we basically have the new accounting rule.